Thank you for tuning in to another edition of the pre-market Pulsescan report. Today is Thursday, February the 8th, 2018. Taking a look at the overnight markets and pre-market activity. Bitcoin futures are up 215. Dow is up 166 at 24,901. You see the Bitcoin is at 8,480. The E-mini NASDAQ 100 is up 52 at 6607 and 3/4. E-mini S&P 500 is up 16 and a half at 2684 and 3/4. Russell futures up 12.8 at 1510.30. Nat gas is up 2 cents at 273. Gold futures is up $3 at 1317.70. And silver is up 14 cents at $16.38. Crude oil down about 10 cents at $61.70. The long bond is down 24 30-seconds at 143.28. And the euro is up 3 pips at 123.09. Pound sterling right now is up 171 pips at 140.70. The Aussie is down 4 pips at 78.20. And the dollar has broken the 90 handle, is now down 17 pips at 90.07. So we got the dollar at 90, just like I told you it would be. We're going to fluctuate between 90 and 91-ish, something like that. That's going to be for the foreseeable future because that is the Trump policy right now. All right, looking at the first chart, SVXY. You see the massive sell-off we had this week. Something was definitely broken. And here on the daily chart, same thing. And looking for correction here, at least back up to the momentum line of $54.77. In the near term, that is the initial target. And we'll see where it goes from there. Right now, market is moving in on the, let's see here, moving in on the $12.91 momentum line on the intraday chart. A close above that would open that door for a run back up to 27 and 37, somewhere between there. All right, and this is doable depending on what happens with equities today. It's doable, hopefully, maybe even by Friday or as early as Monday or Tuesday next week. So we'll see. This one we're really watching very closely. Looking at its counterpart TVIX. Let's take a look here. You can see where this one exploded up and then erased all its gains and crashed right back down again. So this is going to be an interesting one to watch as well. Taking a look at the GXJ, looking at these miners real quick. All right, as you can see, more separation to the downside, picking up, accelerating, and looking like it's getting ready to drop back down to that $30 handle I was warning you about a while back. So this is looking like a washout about to occur in the miners. Taking a look at the gold futures. All right, gold futures has lost the momentum now. It's giving it up. Finding some support right here, the intermediate support area of $13.05. All right, a close below that opens up the door to the major long-term support of 1280.90. Got rampage coming up too, so this could help, like I said, keep prices above the 1300 level. So we'll see. As you know, anything can happen. So far, so good though. I'm going to show you why I say that. So far, so good because the market has survived the vortex that happened. All right, it survived it. It was right here. Prices are still up, coming off a little bit, but still up. Had prices been closer to here or dropped below here, then we'll be headed much, much lower. So this is good. It survived the vortex, and you got rampage coming up So it's looking like price should stabilize along these points, finding some support in the rampage, probably get up to here, maybe even here, pulls back, kind of follows the trajectory of the rampage, probably get a little spike here, not a close, but a little spike candle here, look a little something like this, forgive my drawing, and then from here the market heads upper 1360 handle, somewhere around there. And this will take you up until August. So the market does have that ability to get close to that 1400 handle by the end of the summer. So we'll see what gold can do between now and then. Look on the equity side. Here's the GLD. GLD right now is looking the same as its gold futures counterpart. GLD does a really good job of keeping track with the gold futures. It tracks it almost perfectly. So same thing, time horizon. For this one though, we should remain somewhere between 124 and 128 by August. So we should be around the 128, maybe even get up to 130 by August. So all things being equal. All right, now let's take a look at our silver counterpart. All right, silver's been having a lot of problems with the with the $17 level. I'm still thinking about gold. I said 1300. As you can see here, it's really losing that that momentum. It's gone. All right, this is the second week in a row, and it's accelerating to the downside, hanging over the cliff here. It's a strong possibility we could get back down to maybe 1580, 1550-ish. But we got some good news coming up. We got vortex here and here and here. If the market can get up in the vacuum around this time period, then it could stabilize prices above the $17 mark. So you have here the week of April the 9th, April the 30th, and the week of May the 14th. Market needs to close above the Kumo cloud between these time periods. We're going to have 3 chances to do it. If it doesn't, prices will head lower, and we could wash out even somewhere in the 14 or even the high $13 handle. That would not be pretty, but that is what we see here. All right, let's take a look at the equity counterpart. Here's the SLV. All right, let's blow this up a little bit. All right, so on the SLV, similar to the silver futures, all right, you see second week in a row of losing momentum, and we're now outside of the Kumo cloud. We're trading below the cloud, and as long as the market can start to stabilize between now and right there, which puts us the week of April the 9th, there's a strong possibility we could get above the cloud and get back up to that $17 handle where it needs to be if it's going to build a base for a powerful rally. But as of right now, the downtrend channel is in full effect. Let's see if it can start to stabilize, at least get back up into the Kumo cloud and possibly punch through it between now and April the 9th. All right, let's take a look at the silver miners, see what's going on here. All right, looking at the juniors here. All right, as you can see here, it's looking like it's ready to just roll over, and that's the end of it. Hopefully we can get a key reversal somewhere around in here. If the market closes above $11.34 tomorrow, that builds the momentum case for a run back up to perhaps the $12 mark. That puts us into the air vacuum pocket between trend line, resistance, and the bottom of the Kumo cloud. If the market can at least punch into the cloud, it runs a strong chance to get above the 1350, even 1400 level by April 30th. So there's time for the market to build a foundation, a support base to make the $14 run between now and April. Let's see what it can do. You never know. All right, let's take a look now on the NASDAQ 100. All right, volatility still reigns, but the market is really gunning for that momentum line of 6,700. If this market can close above 6,700 on Friday, that puts in a bottom and it opens the door for a run back up to the $7,000 mark. But hold up. You know what this is. If we were to close right now today at the current level, yeah, you have lost momentum, but you know what this is. This is a pointer, whether we like it or not. So price action hasn't finished yet. As far as we know, this thing could head even lower by the close of tomorrow, and then all bets are off, and we start looking at other things. But right now, we got a pointer. All right, can't ignore it. If we were to close right here today, you know, at some point in the future, we're coming back here, and we're going to take out this low. So let's see how things develop. We're in interesting times in the markets. We just don't know what we don't know. So we got to trade what we see and not fall in love with bull or bear markets. We just trade what we see. On the crude oil side, you see we've given up momentum, but the market's kind of hanging in there with that support. So it looks like the lows are hanging in there. Still, we got another day and a half of trading, so we'll see what happens. But right now, a downtrend channel has formed and the market has lost momentum. All it needs to regain that momentum, the bullish momentum, is to close above $63.36 tomorrow. All right, so we'll see what happens, but this is where we are so far. All right, let's take a look at that. The bonds here. All right, you can see it's in full effect, free fall. Where do we go from here? Looks like it wants to go into that 141 to 140 handle. I look like that's what it wants to do. There's nothing we can do about it. It is in a full-blown bear market on the weekly chart and on the daily chart. This is what it's looking like. So, looks like the TBT is in full effect. And yes, it is. It is punched through the Kumo cloud. It's now topside the cloud. And it looks like it wants to run. It closed at 38.33 yesterday. And right now, in the pre-market, it went up to the highest 30 of 39, and now it's at 38.87. And it's 2 minutes now before the opening bell in New York. So, should see a pullback to fill the gap. So a gap and fill, and then a rally from there. And we should pull back somewhere between 38.60 and 38.50. All right. And right now it's at 38.87. So a possible 20-cent pullback on the open. And then who knows where we'll go from here. Looks like the inverse ETFs are in full effect. Here's the quid. All right, quid is still struggling. This is the inverse ETF for the NASDAQ 100 or the QQQ. All right, it's still relatively cheap. It hit 13.39 so far this week as the top side. All right, pre-market, you hit 12.46. So just not a whole lot of interest in this just yet. and that's because the Nasdaq is up almost 40 points. But we'll see what can happen. So if we're going to get a real, if the bull market's really over, then this market would have already showed you that it's in full effect, and it's not. On the daily chart, you got up to the bottom of the Kumo cloud, which is to be expected, and then it's going to roll over. I just don't see a short play on the equities. Yeah, we got some volatility, but overall, these are opportunities to get long on the equities, not short. That's just what I'm saying. And that's the bell for the opening bell. The only thing I see here to get short would be the bonds. So with that being said, I believe that's all we got time for. Actually, let me do the US dollar just real quick so you can see that. Because all this talk about bonds and the dollar. All right, as you can see here, that everything I've told you in every video I've done where I've showed you the dollar chart, it's doing exactly as I told you. It's trying to close above that $90 momentum, and that's where it is, right? It needs to close above 90.21 tomorrow, and you will put in a short-term bottom, and then the market's going to make that run back up to 92 and 90 and 94. That's 92 the first resistance, 94 is the primary long-term trend line resistance. I'm just saying. Now, where it goes from there, can it go back down? Probably. But it could also punch through the cloud and run. So we'll see. But right now, this is where we are, folks. Trade what you see, not what you think. All right. So with that being said, remember, pulsewavetrading.com. Come learn how to trade these markets, learn how to read the algorithms, and put the power of the AI on your side. Pulsewavetrading.com. We trade all markets on all continents, on every major exchange. And right now we have over 30 cryptos that we watch and trade, and including the Bitcoin futures. So come on over to pulsewavetrading.com, learn how to do this, create a secondary income stream for yourself. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.